Alibaba Group, NYSE, BABA, Stock Analysis. The Alibaba Group is a privately held Chinese company with many companies primarily engaged in e-commerce. The market in which the group primarily operates in China, with sales exceeding the sum of sales created by its two main competitors, Amazon and eBay. Alibaba was founded in 1999 by Chinese entrepreneur Jack Ma and is headquartered in Hangzhou. Alibaba Group's business areas. Alibaba.com. It is an e-commerce marketplace that allows manufacturing companies to connect with distributors and buyers worldwide. The site is in English and is designed for the international market. It administers transactions between traders in more than 240 countries. 1688.com. It is an e-commerce site dedicated to the Chinese domestic market. AliExpress.com. The e-commerce platform aims at small businesses to enable even modest-sized companies to purchase moderate quantities of goods at wholesale prices. Alipay. Since 2004, Alibaba has had a standalone electronic payment platform similar to PayPal. Its strength lies in the guaranteed down payment service, which allows the customer to verify the products purchased before confirming the payment. A measure made necessary by the lack of consumer protection regulations in China. Alipay uses primary international payment circuits, Visa, MasterCard etc. We are talking about financial agreements with more than 65 institutions. Through Alipay, half of all economic transactions in China are now carried out. Auto, Navi. It is a company that provides land mapping services. It has developed a map, an app that enables satellite navigation. Taobao. Taobao.com is a retail marketplace operating mainly in Chinese-speaking regions. Through its platform, small businesses can have an online storefront and connect with millions of potential customers. In 2013, Taobao.com was among the world's top 10 most visited websites. Email. A contracted form of Taobao Mall, it is a commercial buying and selling platform between manufacturers and distributors. It operates mainly in Chinese-speaking markets but is also open to international manufacturers. Financial data. Analyzing the income statement, we see a perfect trend in turnover, growing steadily year on year, although margins and profits are declining, especially in the last year. Overall, the annual profit growth rate over 10 years is more than 20%. Other interesting data from Alibaba Group Holdings Limited ADR, NYSE, BABA. Free cash flow, 14.1 billion, is equivalent to $5.32 per share. Considering the current price, it equals an 8.4% return, but we are talking about the last year, which was numerically one of the weakest in the recent period. The valuation of the stock, market cap 167 billion, also raises a smile if we think, for example, that between cash and short-term investments alone, Alibaba Group Holdings Limited ADR, NYSE, BABA, has something like 72 billion. I will turn it around for you in a more understandable way. The stock is worth $63.15, but of this $27 is practically cash per share. Finally, even at the balance and asset stability level, the ratio of current assets to current liabilities is greater than 1, and the percentage of debt to capital is less than 1. Why buy Alibaba stock? Alibaba is in a leading position in the distribution of goods in China. Therefore, agreements with large multinational corporations that operate globally, and would like to position their products in China, could enhance Alibaba's growth. In addition, if Alibaba invested more in other international markets, its trade weight would increase considerably. We had a step in this direction in early 2017 when Alibaba agreed with the Italian cargo aircraft company steadily to connect with the Montichiari, Brescia, airport. This choice will bring the Chinese e-commerce giant closer to Italy and Europe. This transaction shows us that the geographic expansion of its business is part of Alibaba's strategic plan. The stock is back to its 2015 to 2016 lows, down more than 80% from its 2021 highs. Currently, the tensions seem to be easing, as harming Alibaba significantly would run counter to the CCP's goals of making China the world's largest economy and gaining global influence. Alibaba plays an important role in both cases. It owns the world's largest e-commerce marketplace, with a gross merchandise volume of more than $1 trillion a year, and is a significant partner for global brands such as Nike and Starbucks. Harming Alibaba would make China less attractive to international and multinational companies. The government is trying to avoid a further backlash after many U.S. companies moved manufacturing operations out of China following the previous trade war. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks.